In this video, I will teach you how to identify order blocks and how you can frame setups around them. Okay, so what is an order block? An order block is a candle or a series of candles prior to a strong rally or decline in price. Okay, it is an essential for trading smart money. Okay, it's a candle or series of candles prior to a strong rally or decline in price. Simple as that. There are two types of order blocks. The first is a bullish order block. This is a down close candle or bearish candle prior to a strong bullish move in price. Okay, it's a down close candle prior to a strong bullish move in price. That is a bullish order block. A bearish order block obviously is the opposite. This is an up close candle prior to a strong bearish move in price. All right, an up close candle or bullish candle prior to a strong bearish move in price. Where can they be found? Typically, you want to be looking for your order blocks at premium or discount price levels. What that means is when there is a price range that we are trading, you want your bullish order block to be at a discount price level, okay? And you would want your bearish order block to be at a premium price level. It goes without saying, buy low, sell high, okay? So you're looking to buy at discount price levels at a bullish order block, and you're looking to sell at premium price levels at a bearish order block. Simple as that. And they can also be found at continuation or reversal points in price. So if there was a premium level that is going to get broken through, it would present itself there as well for further price action going up. And if there was a discount level that is supposed to break through, it will present itself at that point as well to serve as a bearish order block. I will make other videos to explain that concept later on. How to identify a high probability order block. There are two metrics that you want to take into consideration every time you want to trade around an order block. First, you need to find the liquidity sweep prior to the formation of the order block. Liquidity will be resting above or below swing highs and lows. Okay, that's the first point. And then next, you need to find the displacement that follows after the formation of the order block. Displacement will be in the form of a fair value gap. I will make a video about fair value gaps later, but to explain this completely, these are the 2 points that you will need to see to be able to validate an order block and then use it as a trade setup. So how to frame a setup with the order block? First of all, let me give you a quick example. 1 second, let me clean up my charts. Okay, so I would highlight an area in price and I want you to pause the video and try and look for a bullish order block in this case. There is no right answer. If you get it, fine. If you don't get it, just hang on, I will explain. Okay. So just pause the video and look, but I'll go on to explain. So we can see a strong rally here, right? Strong bullish rally. Okay. This shows volume in the market, but how would you have engaged this price action if you were looking to buy before this run? Okay, let's zoom in a little bit more. This candle right here, this series of down close candles leading to this one is a bullish order block. Okay, how do I know? I told you, you need to see a liquidity sweep prior to the formation of the order block Liquidity is resting here because I know this is a swing low. Typical anatomy of a swing low. Okay, it's not complex. There is a low and a higher low to the left of it, and then a higher low to the right of it. That's what makes this a swing low. Okay, so we have sell side liquidity resting here. Okay, so this is the sweep, and this move right here is the displacement. How do I know? Because we have a fair value gap that has presented itself right here. So the concept of a fair value gap is a 3-candle pattern, right? Whereby we have 3 candles, that's this, and this, whereby the first candle and the third candle do not overlap. Okay, let's zoom in more. The high of this first candle that comes in at 2624.5, and the low of this candle that comes in at 2625.2. The space in between those 2 points is the fair value gap. Okay, this is an imbalance in price. It's one-sided to the upside. Okay, this is an imbalance in price. This is what you need to see after the order block has formed. When you see that, you know that when price retests this order block, we will have an energetic move to the upside to continue the trend. So coming back to my last point as to how you will be able to frame a setup around this. First, hold on, let me tag this order block. Okay. Okay, so that's the high of the order block. And this is the low of the order block. So if I was to frame a long, to frame a buy from this order block, after seeing these 2 criteria, this sweep of liquidity of this swing low prior to the order block, and then the displacement higher that also broke market structure, that's another point to consider, bonus point, that also broke structure here. After we see these 2 things happen, we would expect that when price comes back into the order block, it would expand higher. So I will be looking to place my entry at the high of the order block, and my stop loss will be at the low of the order block, or a few pips lower than the low of the order block, right? Use your discretion for this. You can use the low of the order block or give it a little breathing room with a few extra pips. And your target will be the most recent swing high. We have buy side liquidity here above these highs. 1 second, let me tag this. Buy side liquidity is resting here above these highs, these relative equal highs. So that could be your first target, and that will give you a 1 to 6 risk to reward. If you use the low of the order block, you have a 1 to 7, 1 to 1.7 rather, and then you can aim for a 1 to 2 industry standard. Aim for a 1 to 2, and that would be a good trade right there. That is for a bullish order block, right? It's pretty simple, nothing too complex. So I would give you an example of a bearish order block. I think I had seen one. Yeah. So what do we say are the attributes of a bearish order block? It's the up close candle prior to a strong bearish move in price, okay? So what I would like to see is, first of all, let's do the exercise again. I'm going to highlight this area where the order block is, and I want you to take a minute to identify the order block. No right answers, no wrong answers, just tell me what you see. You can pause the video, but I'll go ahead to explain. Some of you will never pause. Okay, so this is my order block right here. Well, how do you know it's the order block? How do you know it's the order block? Okay. Simple. We have, let's make this red since it's bearish. We have a swing high prior to the order block. Okay. We have a swing high. And what did I say is resting above swing highs and lows? Liquidity. So we've seen this, 1 second. We've seen price sweep above this high, this swing high, and then break below, given a displacement. Where is the displacement? The fair value gap. Okay, let's extend this out so you can see. Coincidentally, the low of this order block makes up for the high of the fair value gap. Okay, these dashed lines here are delineating the fair value gap. So the criteria is the same. You see price trade above a swing high and then break lower with a displacement. When we get back into that order block, into that candle that swept liquidity and is responsible for this displacement, we expect price to go to sell even further. Okay, simple as that. We expect price to sell even further. So let's tag this as bearish. That's minus. Right. So when we get back into the order block, we expect price to sell off, which is what happened here. So in this case, if I wanted to sell, I will put my entry at the low of the order block. My stop will be at the high or a few pips above the high. And my take profit will be at the most recent swing low, which is this guy here. Okay. That will be my first target, low hanging fruit. And that's a 1 to 5 risk to reward in this case. If you were to settle for a 1 to 2 risk to reward, you'll be done this trade around here. You'll be done with this trade around here if it was a 1 to 2. Seems pretty easy, doesn't it? So, I hope that covers everything you need to understand about order blocks. We would expand on this in consequent videos. Like, subscribe, and share. See you later.